Hello all and welcome again for the new video of Market Vision, where we analyze today's market performance and we will also be looking ahead as to what these trends might signal for the coming days to weeks. Let's go straight to understand what has changed in the markets today. The market was in uptrend immediately on opening. There was a good rebound seen in Nifty, which moved up by 105 points, roughly around 0.45%, and Sensex was up by 318 points, around 0.41%. Today, the majority of the indices were trading in green, of which banks were up by 2.5%, media was up about 1.52%, and energy had gained 1.44%. There continues to be a pouring of cash by FIIs. So FIIs had a massive buying to the tune of 11,111 crores today, and DIIs as well did not shy with buying. They pumped around 2,518 crores. Today being the last weekly expiry of the year, we anticipated lot of adjustments in the portfolios of the big institutions. So let's jump to understand from the charts perspective as to how the market is expected to tune for the coming days. So as you could see the charts of Nifty, so as we anticipated that Nifty could come and fill the gap, and it has exactly done the same. So yesterday, as per our discussion, this was the anticipation that we had done, that market seems to be in the continued bull trend. So they would definitely would not like the markets to maybe collapse at the crucial levels. So the anticipation was that the gap could be filled by today, and then we could see the recovery happening this way, and then sudden spike happening, which will help the markets to rebound and continue moving towards the higher high and lower low structure. So we have to see until when this trend is expected to continue. Now looking at the massive buying by the FIIs, seems like they are in no mood to let the markets fall from these levels. So maybe market can come or reach towards the levels of 24,500, or above that, and then from there we could see a downfall until these levels again. But yes, at least for the month of April, if this kind of continued buying momentum is seen by the FIIs, then it is very difficult that our markets will be turning bearish anytime soon. So we have to stick with the trend as long as the trend is intact, and we see immediately green shoots from here as recovery signals, then there is no point in taking any short positions. Rather, at each higher levels we have to keep shorting the puts somewhere around at 23,500 or below levels. So that will really help us to stay with the trend, and at the same time make enough of profits as the market continues to move forward on the uptrend range. Now two scenarios that are possible. One, from tomorrow itself, the market will have a slight 50% of the gains what it had made as a big candle here, right? And then from there on, each day we can continue to see the buying trend. This is one scenario. The next scenario could be immediately once the market reaches this level. At this level it can touch again at the resistance and then show a downfall. Okay, so these are two scenarios. Or once it reaches at this resistance, it can stay here for some time and then rebound like this, right? So these three scenarios could play out. One, stay consolidated and then a rebound. Another, stay reach to the resistance and then show a reversal from there. And the last, maybe it continues with the higher highs and then moves towards 24,600 to 700 level short. So we will see from the options chain data what it suggests. Now for 3rd April, we already see a strong support here at the at the money puts. The PCR ratio also seems to be good, which is at 1 overall and 0.78 for at the money. There also seems to be additions in the call side. However, compared to what immediate support that we could see around at 23,500 levels, and at 23,600 levels, these supports can sustain for the first week of April. And if this continues from here on, then we can surely see the markets crossing the 24,000 levels in no time. So let's maybe track. We will be just waiting for one day's close, that is tomorrow's close. If Nifty is able to sustain and maintain the levels of 2600 even for tomorrow, then in no time the markets can reach to 2800 and continue from there on until 24,000. Now let's see from the Sensex perspective. Even Sensex touched or filled the gap today at this level, and then we saw immediately markets recovering from there on, because there had been massive buying with the start of the markets itself, and that continued throughout the day. So there was at each candle there was buying that was seen, and because of a massive pouring by the FIIs as well as DIIs, there was no bearish signal on the entire charts for the day. So this trend might continue further as we were discussing from the perspective of Nifty indices too. So this might continue until we reach towards the next resistance level, which is only around 80,000 levels, 79 to 80,000, 79,000 800 to 80,000 levels. So we are already at 77,600 levels, so 2,500 points is not so difficult in this bullish trend. So markets can surely expected to continue in the continued buying momentum, can stay in the continued buying momentum and reach those levels, or markets can further rebound from here, face this resistance and then come down. So this is another scenario. Or markets can reach at this resistance level, stay here in a consolidation phase for some time, and then bounce back towards the higher levels. Okay, so tomorrow's closing is going to be very crucial. As long as these levels of 77,000 to 78,000 levels are sustained, that means there is a good confidence for market players to go long. And then at every rise we could see a strong support coming in from the put sellers at these levels, like 76,500 levels, 76,800 levels, and then 77,500 levels, and further once it moves up towards 78,000 levels. So we have to wait and watch to see what kind of trades or maybe closing that the market is expected to have. From the open interest perspective, we could immediately see a big resistance at 78,000 levels from the call option sellers. On the lower side, we see 77,500 seems to be a strong support, where put sellers have been setting tight, and further at every 500 points we see strong support coming in at 77,000 levels, 76,500 levels, where we do not have maximum call sellers that are getting added. On the long sides, if we have to see, if 78,000 is taken down, we do not see any crucial resistance until 79,000 levels. So then maybe at 77,500 levels we have strong resistance again, and maximum resistance is seen only at 80,000 levels. So as we were telling that if the market keeps in the keeps up in the continued rally, in no time we will be in a position to reach 70, we can cross 78,000 levels, reach 79,000 levels, and then approach 80,000 levels too. So April month is again going to be very crucial. We have to see what is the rollover percentage that has happened from the March month. If it is beyond 65 to 70%, then that is a very good positive sign that we would be seeing for the markets to remain continued in the bull trend. Moving on to Nifty Bank. So Nifty Bank almost uh, maybe partially we can say this is like a bullish engulfing candle, but yes, not, it has not fully engulfed or covered the previous candle, but this big candle suggests that there is a good momentum that can be seen in Bank Nifty, and immediately it can reach to the previous resistance levels of 53,500. So we are roughly around 2,000 points away to that level. And the first resistance that we had seen is at this level, so this can be easily taken out maybe in a day or 2 days session, and then from there if the strong momentum of buying continues, then in no time we will be able to reach to 53,000 levels and beyond. So we have to see if there is a good support that comes in at all the banking stocks at the lower levels, then we are bound to reach above 52,000 levels at any point in time. Could be maximum in the first week of April month itself. So for me, Bank Nifty is comparatively very bullish, and is giving a buy signals at these levels too. So anyone who is looking out for buying can immediately jump in and not wait for how the market is going to react at these zones. Rather they can keep a stop loss of at this level, or maximum at this level, and then go on longs. From the option chain data or the open interest perspective, since we have only opened up for the April month contracts now, that is when there is no point in discussing where the market is expected to move forward. Okay, from the charts if we look, it seems to be very positive uh, for the Bank Nifty to take off the immediate highs and move forward of 52,000 levels. There is equally call option writing that has happened, and there is a strong positive support that has also come in at 52,000 levels from the put sellers. So we have to see, it is like a tug of, it is going to be like a tug of war between the buyers and the sellers. So if uh, Bank Nifty is able to sustain 51,500 levels for tomorrow, and then approach towards 52,000, then it gives a clear signal that we would start seeing the weakness on the call option writers, and they would start taking off the positions from here on, because there is no strong resistance straight until 53,000 levels. Okay, it's very early to tell that how the market is expected to move forward, but looking at the massive buying from the um, or selling from the put writers at these levels, 53,000 levels, strongly suggests that there is going to be a spike in the trend, or maybe the candles on bank nifty. So as I told, that bank nifty seems to be very positive, and is in the buying zone at this current levels too, where we need not to wait for any confirmations, maybe by tomorrow or in the next week. So as we start seeing more built up in the positions on the derivatives in the coming days, it would very evidently give signals as to how the market is expected to trend or move in the coming weeks. Last on FinNifty, FinNifty has also been again in the strong buying momentum, where it has not even maybe closed below the previous days low. So immediately when it started from this level, there was continued buying that was seen, and it engulfed almost the previous day's bearish candle. So there are lot of positives that can be expected out of FinNifty again. So we might immediately see tomorrow, or maybe by the first week of April itself, 25,000 500 levels being taken out by FinNifty, or at least it would reach to these levels. So let's see on tomorrow as well as the next week, given the fact that Monday is going to be a holiday for our markets. So Tuesday is again going to be weekly expiry for Sensex, and it's going to be a short week, right? So we would see a lot of volatility coming in there because of short weekly expiry, and since there is a good buying momentum that has been seen both by the FIIs as well as DIIs, so we are quite positive typically in the banking stocks and the overall financial services sector, where we can start seeing the first signals of approaching towards 52-week highs, and then taking the markets in the bull trend for a longer run, and then gradually the broader indices would also start catching up over a period of time. So from the option chain data or the open interest perspective, there is no point in commenting anything here. So we see a strong support as well as resistance at 25,000 levels. Once the 25,000 levels are taken down until 25,500, which is again um, the round of closing numbers, that is when we are seeing good build up in the call options, or maybe open interest on the call side, and then again at the 26,000 levels, which is again the round of number, right? Similarly on the support side, on the puts, we could see a strong support coming in at 24,500 levels, and the next support comes at 24,000 levels. So since it requires built up of trades expected to happen in the coming days, so there is no point looking at these bars and comment anything. But from the charts, we can very clearly make out that there are good buying signals that is very evidently seen on the index, and that should be the first trigger for us to go long for the coming week. And then when it starts consolidating, that would be the sign where we can partially exit and hold on with few positions to decide on the trend. Once the trend remains intact, be it upside or maybe downside, accordingly the positions can be taken. Now let's discuss from the perspective of FII and DII data. So on index futures, we see a maximum coverage on the index futures that has been done. So foreign institutional investors are winding up their short positions, and then only 30,555 you, you know open interest positions are seen. Um, so this is a positive sign again, where FIIs are expected to close the entire shorts and start you know towards net buy on the open interest positions. On stock futures, again they are very bullish. 16.07 lakh open interest positions are being held. On the index options, they are long by 1.52 lakhs, and they are equally long in the puts. So this is an indecisive zone where equally they are long as well as they are shorts in the index options. So we have to see what other market participants are doing. So the proprietary traders, they are again short, where they have additionally added their short positions today. They are short by 36,352 contracts on index futures, and they are long by 4.16 lakhs on the stock future contracts. In fact, they have added doubled their long positions alone today. Could be because of the market weekly expiry. So we have to see if this positions have been taken for the uh, April contracts. Of course, it is for the April contracts, no doubt about that. But yes, what the you know closing positions had been, we will only get to know maybe after tomorrow's expiry. Sorry, tomorrow's market closing. So moving on to the index options. On the call options, proprietary traders are long, and on put options they are short. So this uh, you know direction by the proprietary traders and FIIs signals a change in the market direction. So for now the markets have been intact and showing that strong support where it is not expected to fall down, maybe at least for the coming week. Okay, let's understand from retailers perspective what they are up to. So retailers are long 8,836 contracts on index futures. They are quite bullish in stock futures with 17.67 lakh contracts. They are long, sorry, they are short on call options, and they are also short on put options. So net uh, retailers are neither long nor short on index options. However, FIIs are again neither long nor short, but DIIs are massively long. They have shorted the puts and they have been long on the call options too. So they are quite bullish for the market to move in the uptrend zone. Okay, now let's finally try to understand where the market is anticipated to move based on the cash market positions. So DIIs have bought 2,518 crores today, which is massive in number despite the weekly expiry, and FIIs have had humongous positions. They have taken 11,111 crore of cash market positions, which is massive in terms of number. So can this really give signals to us that the market is expected to continue the uptrend, or it is just uh, you know um, for the closure of the expiry week, or to adjust the positions for the annual statements on the institutional reporting. So we have to gauge and understand how the market moves for tomorrow. If the market continues to keep its uptrend, then in the April month again we can surely see a lot of recovery happening from the lower levels, which can take the markets towards a decisive bull stage, from where we would start seeing continued buying from the retailers too, over a period of time. Yeah, so that's it on the markets for today and the anticipation for tomorrow. Hope you have liked the video. Thank you, and continue supporting us by subscribing to our channel. Till then, happy trading.